Hello and welcome everyone to Gold Asset of the Day for the 17th of August 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So it's been confirmed, inflation in the UK has now hit the highest levels since 1982, coming in at over 10%. With that, we've also seen UK natural gas prices, they have surged to all-time highs over the last 24 hours. In fact, over the last month, UK natural gas prices, they're up over 100%. And alongside that, US natural gas prices, they broke out to 14-year highs just overnight. And we've also seen gold prices, they broke out above $1,800 per ounce. And copper prices, of course, last week, they also broke out to 6-week highs. And silver prices over the last month, they are up 9%. Now, bringing it back to the data with respect to hedge funds and money managers, we have seen a significant increase in the last week with respect to inflows into gold, a 9% increase, taking it to 63% of those that have a position on gold are currently long. And with that, of course, that further helps gold prices slingshot higher last week off the back of the CPI data as well, where we saw gold prices, they broke above $1,800 per ounce. Now, this week, of course, the major focus now is going to be on Wednesday's minutes from the FOMC statement scheduled at 7 o'clock London time. So that is going to provide further volatility. Now, our main game plan over the last week has been to continue to scale out of further profits on commodities. So last week, we took the opportunity on the spike higher above $1,800 per ounce to bank over 2,000 points profit with our clients at the Gold and Silver Club last week on gold. We also banked 500 points on copper when it broke out to 6-week highs. We banked 185 points on silver when it broke back out to 1-month highs last Friday. And we also took the opportunity to bank 450 points on Brent crude oil and 125 points too on the US dollar. So we've continued to bank a windfall amount of profit over the last week, scaling out as you've seen these breakouts to the upside. And what we're seeing at the moment is the dollar is starting to get some support right now, which is typical as you get towards the end of August, as it's very common to see end of month outflows. Capital starts to rotate into the dollar and the dollar picks up further momentum once you move into September, which can cause, of course, a bit of profit taking on other commodities. And next week, we also have the Jackson Hole Symposium, where we're going to be looking out for future monetary policy guidance from the Fed before the FOMC statement as we move into September, where there's a lot of speculation as to whether the Fed will go ahead with the 0.5% increase in rates or a 0.75% rate increase. So with that, it's going to be lots of eyes again on the minutes of the FOMC today and next week, the Jackson Hole Symposium, which will provide you further opportunities to capitalize on this volatility. So right now we have gold trading around $1,775 per ounce. Again, our main game plan here is to bank on strength. If we do get another rotation back towards the 1800 level or higher, I'm looking to take more profit off the table, but I'm not looking to buy at these levels right now. You have to remember we were very early to this trade. We were buying all the way down towards the 1700s. Our main objective at the moment is to continue to scale out of profits here over the next week. And we have also started to rotate some positions into the dollar as well, and also into oil, which is currently breaking back down towards the swing lows, which we perceive as an area of accumulation here. This is where you want to be utilizing statistics, data, market intelligence. If you're not making money in these markets right now, you absolutely should be. We have inflation currently running at the highest level in over 40 years. If you want to make sure that you're inflation proof and recession proof, there's no better skill than trading. But you need to make sure that you're learning to trade the right way, not using outdated technical analysis or gimmicky technical indicators. It's 2022, the age of data. This is where you want to be utilizing data, statistics, market intelligence, the research-driven approach. Further compound that as well with learning the daily, the weekly, the monthly, the quarterly cycles for each commodity. Align that with the capital flows in the market, key areas of liquidity, learn and understand the statistics, the data, learning the intermarket correlations, the ratios in the market, the narratives, the fundamentals, the geopolitics, and of course further align that with how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.